So you are investing again 1 lakh rupees for 15 years, same. Then return 1 lakh rupees for 50 years. Okay, and lump sum at maturity. You see this lump sum amount, you'll have to tell me this lump sum. Then only I'll be able to calculate it. Sandeep, what is the lump sum? You have some estimation, some guess you must have. Some estimate. Some guess you must have. Tell me what is the lump sum? Quick, guys. 4 lakhs, okay? Fine, 4 lakhs. What is 4 lakhs? 4 lakhs. Was that also lakh? 40 lakhs? 40 lakhs? 40. Okay, 40 lakhs. Okay. So now for 50 years. 50 years means again it's starting from, it's again same way, right? Periods, and here's the cash flow. So now here's the periods 0, 1, 2, 50, right? Be with me, huh? So because such that, I do not commit mistake. Because sometimes like what happens, like in understanding 55 up to 50, okay, 50 years, right? Is it right? Correct? From today till 50 years, right? Sandeep? Yes. This is correct, right? 50 years total. Yes or no? Sandeep? Yes. Okay, beautiful. So now you are paying 1 lakh. You are paying 1 lakh for how many years? 40. 15. 15 means from 0, so it will go up to 40. Okay. This is 15. Yeah. So then return will be okay. Always you remember there will be a gap period. Always it happens. Because when they give, they will give at the end of the year. Today you will have to give today. But when say you will have to pay in 1 year, that means you will have to pay today. And when they say we will pay you after 1 year, so they will actually pay you after completion of 1 year. Means second year they will pay. It is always 99%. It is like that. Okay, so they always take 1 year more to make the payment. So now your return is 1 lakh for 50 years. Okay, so plus 1 lakh. 1 lakh. So now I need 1 lakh, and at the end you are getting 1 lakh plus 40 lakhs. So this is 40 lakhs is guaranteed. This 40 lakhs is guaranteed. Sandeep, 40 lakhs is guaranteed. Just say it so. So you be clear. Huh? So now this is the cash flow, right? So I am giving this is the cash flows. 40 lakhs plus 1 lakh. Okay, right? Correct? This is correct. Cash flow is correct. Sandeep, cash flow is correct. Cash flow is correct, Sandeep. Cash flow is correct. Sandeep, this cash flow is correct. Correct or not? Cash flow is correct or not? This is correct, right? It will go up to 66 years. No, Sandeep has bought it. Sanjeev Gupta. Or he will know it, right? Those who are having Sanjeev, if you have like such kind of plan, please post it. I'll calculate that also. Don't worry. Okay. So now let Sandeep, because he knows what is his terms and conditions. We don't know his age. We don't know anything about him, right? So we never know. So your product will be different. His product will be different. Sandeep, these cash flows are correct. Sanjeev Gupta, please post your query, post your cash flows. We'll do the calculation. Okay. Sandeep Gupta. So sorry, Sandeep. Insurance for 15 years every year, and then maturing is on 20 years. Yeah, Chandrasekhar, Sanjay Gupta bought from 16 years to 15 years. He is getting only 34 lakhs. Yeah, that's what, like, Sandeep, it is Sandeep's problem. Sanjay Gupta, you see, put your problem, give your problem separately. Because it is, he has bought the product, he knows better, right? We do not know. So he knows he has got the product. Hey, Sandeep, are you there with me or not? Sandeep, Haringana, he has left. Okay, anyway, I'm doing the calculation, okay, on his behalf. Haringana, he has left. Okay, so I think he has left. Or he got disconnected. Okay, whatever. So now we are doing the IRR. Okay, so now. Okay, so now, so this is with the return he is going to get 5.15% per year. Okay, this is the return he is getting. Okay. Okay, so everybody, please put your question here. In this, I have already given you the link. Again, I am giving you the link. Always put your question here, everybody. Okay, put your question here. Okay, so now I am taking a loan for 20 lakhs and interest rate of 12.5% for 10 years. I am paying my debit of 12 lakhs and I have remaining fund for 10 lakhs. Please guide me. Please guide me how to manage my loan fund. You see, like, this Mr. Params. Params, you see, like, this is your loan. Now you see, like, loan is what? Like, loan is, it will be like a different discussion altogether. Okay, so there is a change in formula in case of loan, particularly rate formula. Rate formula changes slightly. Okay, so now this will take quite long. So I'll have to really make you understand entire thing. Okay, so I'm so sorry. Right now I'll not be able to respond it. Okay, so let us do only with investment today. Got it? So in case you join my next level course, in that there, like, you'll get proper knowledge, thorough knowledge, how to calculate everything. Got it? How to calculate if we pay house loan in regular installment. Again, house loan, let us not discuss loan because of this, the entire cash flow changes slightly, so we'll not be able to cover it. Okay, I want 10 crores after 25 years. How much I need to invest? Mr. Siva Teja, are you there with me? Mr. Siva Teja. Mr. Siva Teja. Mr. Siva, okay, you are there. Okay, so now it is very simple question. Now you'll have to give me one more. Okay, I'm taking this question. Siva Teja. So it's very simple. Again, I am going to, tomorrow we are going to discuss it, but still, it's Siva. Okay, so, but still, since you have asked me, so I'm going to answer it. Okay, so now here you'll have to give me, you see, like, how. So here you have, here I want 10 crores. So 10 crores is what? You want 10 crores. So 10 crores is what? In computer language, you want 10 crores. 10 crores is what in computer language? It is, Siva, do you know that? Do you know that? In computer language, you need 10 crores. 10 crores is future value, right? Your future value is, now we know this rate and INR. Sorry, NPER, number of periods. PMT, EV, and FV. Okay, so now your 10 crores is your 10 crores. 10 crores is the future value. Okay, so now 25 years is what? 25 years is what? 25 years is what? 25 years is 25 years. 25 years. 25 years is what? 25 years is period, right? Period means NPER, number of periods, right? So number of periods is 25 years. Okay. So now you tell me, Siva Teja, you want to do systematic investments, means every year you will put something, or you are going to put lump sum. Lump sum means today only. SIP. SIP means, okay, SIP. SIP every month or every year? Every month or every year? Every month or every year? Every month, right? Every month. So it will be month. So in case of month, your 25 years will be, also should be in month. Okay, it should be in month. So it will be 25 into 12. 300 months, because everything else should be month. Okay, now you see, now PMT, we need to find out PMT. This is what our problem is. Present value, no lump sum, 0. Now we need this. You must have idea where you are going to invest. So this is the challenge. We need rate. Okay, can you tell me what is the rate? What rate? So for that, this is the big challenge, right? Education is needed to decide this rate. 14%, 10%. Siva, you tell me. What? As I said, like, for Junjunwala it is 100%. For me it is 20%. For my students, minimum is 12%. For somebody 15%. So you'll be able to get 15%. Okay, 15% per annum. But we need per month. Okay, so what will happen? What we'll have to do? We'll have to do 15% we need per month divided by 12. Okay, so this will be 1.25% per month. Everything is per month. Okay, so now we need to find out PMT. equal PMT, bracket starts, rate 1.25%. Then after that, NPR 300. Then your PV is 0. NPR is 300, it will be minus. Huh? I'll give you minus, sir. Just a moment. NPR because, sorry. Oh, NPR not minus. The PMT will come automatically minus. Sorry. PMT bracket starts and your rate NPR PV includes. Okay, and then comma 1. So 30,449 every month you will have to pay. Got it? This is how it has been calculated. Okay, got it? Yeah. Okay, so now second is difference between equity debt fund and liquid fund. Aninda Chatterjee, like you see, if you really want to understand, please go through level 4. Equity fund is they invest in equities, share market. Debt fund means they invest in debt market. What is equity market? What is debt market? If you're really interested in learning in details, then you'll have to join my next level course. Okay, because here it is like too short a period to describe. So it's a big market. So we need to have detailed understanding. And liquid fund means it's a money market fund. We have these three financial markets. We have these three financial market, major financial markets. Commodity is a commodity market, so not a financial market. Okay, securities market, financial market, these three majorly. Okay, equity means share market, debt means debt market, and money market. Okay, so you will have to have knowledge. So now at this point of time, it will take long to describe, right? It will take a couple of hours. Got it? So give me some, is it advisable to take home loan for property as investment for long term? Amar Chilka, you see, Amar Chilka, it depends on you. Amar Chilka, are you with me? Amar Chilka, are you with me? Amar Chilka, are you with me? Okay, you are there. Now tell me, if I ask you what is the home loan rate you will have to pay if you take a home loan? If you take a home loan, how much you will have to pay? What is the interest rate you will have to pay? 7.5%, right? And if you make investment, what is the 100% with 100% guarantee? What do you say? How much you will be able to return? How much return you will be able to generate with 100% guarantee, or at least 80% guarantee? How much return you will be able to generate? 12% return. Okay, if you are 100% sure that you will be able to get 12% return, then it is always better you put your money in market. Right? You see, if you are educated, financially educated, because 12%, if somebody say, okay, 12% guaranteed return I can get, that means he is a financially educated. Okay, you know what is the SIP return of long-term SIP return? Say 10 years SIP return of Nifty. Do you know that? 10 years SIP return of Nifty. You know what is that? Okay, no, right? It is the average is 11% and downside is 4%, upside is 30% or something. Okay. Now, what do you think? Majority, 98% people, how much return they make? Below 11 or above 11? Below 12 or above 12? I'm asking you. Any idea? Okay. Most of them, they make only 4, 5, 6, 7% only. Okay. 98% people. Got it? Or what happens when the institution they sell the product, they only show that average. Above average, only those people who are having thorough knowledge of investments plus institutions. Okay? Because institutions, they are run by professionals like me. Right? So only they belong to that 2% who makes above average. Okay, so that's why. So we have that feeling that everybody can earn 11 or 12% return if you continuously doing SIP. Okay, but this is the fact. Always remember that. Okay. Now I'm just giving you such that you are aware what actually happens in the finance market, right? Okay, there are so many questions, huh? So I am taking. Okay, there are so many subjective questions. I am going to see some practical questions, right? Just a moment. Okay, in case of a In case I'm invested in a share, I'm getting a profit of 15% with a different time of investment. How to decide whether it's a good return, and total time is 5 months. No, ultimately, you see, ultimately, if you do IRR or XIRR, whatever you are getting, that is the total return. Sometimes you are getting probably like -%, sometimes you are getting very high positive rate. Ultimately, over a period of time, when you do XIRR or IRR, if you are doing fixed, then if you do IRR, and if you are doing like randomly, like I showed you, then you calculate out XIRR. So that is the actual return over that period of time. Okay, always remember that. One hasn't proposed a child growth plan for 15 to 20 years for a total investment of 15 lakhs and return after 18 years. Okay, this is 18 years in 4 installments, sum of around 1.5 crores. Now, this is a very beautiful problem. Okay, Mr. Sagar Meher. Sagar, are you there? Mr. Sagar, are you there with me? Mr. Sagar Meher, are you there with me? Okay, beautiful. Okay, this is awesome. Okay, so very practical, and I know we need face like such kind of product, right? Every day. Okay, let us see. It can be good, it can be bad. We don't know. Mr. Sagar. Okay, one has proposed a child growth plan for 15 to 20 years. Now, for a total investments of 15 lakhs. Now, 15 to 20 years means you'll have to give me 1 year. What is this, Sagar Meher? 15 to 20 years means what? 18 years. Okay, fine. For 18 years. So you can do that calculations once you know 18 years. 18 years for a total investment of 50 lakhs. So investment is 50 lakhs and return after 18 years in 4 installments, sum of around 1.5 crores. 4 installment will happen 18 years, then 18 years first installment. Second installment will be when? Every year, 18 years, 90 years, 20 years, it is like that. 18 to 20 years, right? So 18 to 20 years. Okay. So let me correct it. 18 years, and after 18 years means 18 to 21 years. In 4 installments, 18, 90, 20, 20. Okay, fine. Beautiful. Okay. This is like this is a very practical. So now here we are getting periods in years. That is good. It is years. If it is month, then it becomes very difficult. Okay, cash flow. Cash flow. 0, 1, 2, 18, 21, right? Up to 21. It's 26. 26. Okay. Now, so you are making an investment of, today you are making an investment of minus 50 lakhs. Minus 50 lakhs. Okay. Then after that, nothing. And then you are going to get 18 years. 18 years you'll be getting 18 years you'll be getting 1.5 crores, right? 1.5 crores, 1.5 crores, 1.5 crores, 1.5 crores. Am I right? This is correct? Yearly installment. Okay, this is correct. Investment around, okay, interest rate. This is correct. Sagar Meher, this is correct. This cash flow is correct. Cash flow is correct. This cash flow is correct. Sagar Meher. No, tell me where is wrong? It's yearly investment. That's it's yearly investment. No, then you'll have to give that, right? Open propose a child plan 18 years for not total investments. Yearly investment for how many years? Yearly investment of rupees 267538. Of rupees 267,538. 18 years. Okay, for 18 years. 18 years. Okay, yeah. Okay. Now this is okay. Okay, so minus 267,538. Okay, for 18 years. Now you see, this is normally what happens. 18 years means starting from today. So this is so total 18. Okay, this is total 18. From 0 to 17, total 18. Okay, this is correct. Mr. Mahar, this is correct. Okay. So now it is very simple. Now you do IRR. So return on investment, how much is equal to IRR? Bracket starts. Okay. It's a huge return. If you are sure this is how it is, 100% sure, this is huge return. Every individual should go for this. Are you sure this is the cash flows? 100% sure. There is no hanky panky, nothing. Exactly like this. Is it exactly like this? Yes. If it is exactly like this, you should invest much more. Not only 2,67,000, but much more you should invest. Okay, because you will not get such kind of investment, guaranteed investment in today's world anywhere. If this is how it is, okay. Make sure that there is no hanky panky because it is too good to be true. Let me tell you very frankly. Okay, I haven't seen any such kind of investment so far. It is too good to be true. FV is only 1.5 crores. Is it like that, Mr. Maher? Is it 1.5 crore distributed over 4 years? Is it like this or is it like this? Okay, 1.5 crores. How much it is? 37,50,000. It is 37,50,000. Okay. Okay, fine. Okay. 37,50,000. 37,15,000. No, then 37 lakhs. Oh, sorry. I gave 1 0 less. Okay, that's fine. Okay. 37,50,000. Okay. Okay. So then also not bad. If it is a guaranteed, then also not bad. 10%, roughly 10%. Roughly 10%, that is also not bad. Okay. If you're getting guaranteed, because the safest one is PPF. PPF gives 7.1%. And we do strongly suggest at least some portion to keep it safe, 7.1%. If you are getting safe, guaranteed 9.79%, that's pretty good. Okay. Okay. Yeah, this is what I have done. This is the 1.5 crore, right? This is 1.5 crore. Am I right? 37,50,000. So this is 1.5 crore. Okay. Now you please check that entire cash flow. Okay. Ask him that to give cash flows. That is very necessary. You ask him, okay, please give cash flows from starting from 0, starting from today. Then every year, what is the cash flows? Okay. This is the trick. Then after that, you know how to do that calculation. Okay. So now, okay, this is Mr. Sagar Meher. Then after that, Mr. Narpar. 1 crore of future value in 10 to 15 years. How much monthly investment is required and what is the best investment option? You see, Mr. Narpat, are you there with me? Mr. Narpat, are you there with me? Yeah, Radha Kanda, you can do XIR also. You will get the same result. Only 0.01% less or okay. You will get the same result even if you do XIRR. But only thing is that in XIRR you have to type out all the dates. Okay, that's the difference. So again, you have to type date one by one. Okay, that's why we use IRR. You will get the same results. Okay. Okay, amount par is shared by Raza. Okay, Sagar man, if it is like this, then this is very good. Okay, in fact, if guaranteed 10% return they are giving, it's good, right? And it's a challenge also. Getting guaranteed 10% return is a challenge for even fund managers. Let me tell you. Okay, real fund managers, right? Yeah. Okay, so now NARPAR, you see NARPAR, I have already calculated this thing. Okay, similar calculations I have already done, or where I have done this calculation. Oh, this is where we have done this calculation, right? Yeah, yeah. Same way you'll have to do. Now you are asking me what is the best investment. You see, best investment depends on your knowledge. I always emphasize here because why? Let me tell you. I keep telling this story everywhere. You see, when you go to your doctor and you say, you call up your doctor and you tell her that, okay, I am having pain here. what she will do, she will tell you. She will ask you to do, okay, do this test, that test, that test. Okay, you get this test done, you go to her with this report, she will look at the reports. Okay, after that, she will tell you, probably we'll start this, and it should work fine with you. Okay, she will say like that. Now you go to a quack. Quack means all these doctors who sits under the tent, with big speakers. They keep on playing some messages, right? So these are quacks. You call him up. He'll say, okay, right now you come. You say, I cannot go. So send somebody. I'll give a glass of water. Tomorrow early morning you have it. I guarantee nothing is going to happen after that. I guarantee you it will be all right for your life. Now you see, one quack can guarantee. Why? Because he has not seen inside. A doctor, she cannot guarantee because she has seen inside. She knows exactly what it is and how complex it is. So that's why she never guarantees. Got it? So that's the difference. Those people who do not have knowledge, they will guarantee you and they will recommend you funds like that. But I am being somebody who was advising fund managers and who designed IPOs, who designed how to value shares, right? I know that it is not possible to recommend one fund or one investment which will work for 20 years. It is not possible. Okay, beware. Trust me. Got it? So you need to have knowledge, and as I have already told, that retired army, I have already told what to do if you have no knowledge. Anywhere you have knowledge, invest there, or otherwise do go for safe investments like debt fund, long-term debt fund for long-term, short-term debt fund for short-term. That much I can tell you. Okay, because I don't want to mislead you guys. Now again, there is a loan question. You see, loan I am not taking because for loan, calculations will be slightly different. Now it will take time to explain. Okay, so loan questions I am not taking. Sir, if I have goal of rupees 10 lakhs in 5 years with rate of 15%, then how to calculate PMT? Suman Parbat. Suman Parbat, are you with me? Mr. Suman Parbat? Mr. Suman Parbat, are you there? Okay. So now will you be able to do it same way? Okay, I'm pretty sure you'll be able to do it, right? Same way. Now you can here only you can just change it. PMT PVFV here only you can do that. Your goal is 10 lakhs, right? So 10 lakhs goal is 10 lakhs. Okay, goal is 10 lakhs, and your PV is 5 years. 5 years means 5 12 are 60 months, and rate of return is 15%. So here is also 15%. Okay, so this is NPR 300 months 6. So you'll have to, goal is 10 lakhs, right? Okay, so PMT is, PMT, what happened? Equal to PMT. I messed up. Okay, this is 60. Okay, this is 60 months. So this is the PMT, 11,150. Okay, somebody, Suman Paraya, you have done it? Yeah. You have already become an expert. Okay, I'm so happy. You have already become an expert. Okay, that's what you should be. Okay, got it? Okay, yeah. So you don't need my, that's what my promise was, right? That from today onwards, nobody will be able to cheat you. You will be able to do it yourself. I am investing in an LIC policy, Mr. Imran. 2,76,000 for 13 years. And at the end of the policy terms, at 16 years, I will be getting this much. Okay, so this is another, I think, let me do the calculation. Imran, are you there with me? Similar questions I have already solved, but okay, let us see. Imran, are you there with me? Okay, you are there. Okay, just a moment. Duplicate. I am going to share these sheets. Okay, don't worry. Okay, I am investing in a LIC policy of 22,76,000 for 13 years. Okay, I'm using this only. Minus 2,70,000. Okay, first is the 16 years, right? For 16 years. After 16 years, you will be getting this much. Okay, till 16 years. Okay. It's very simple, very simple. So this is minus 2,76,000, 2,76,000, 2,76,000 for 13 years. For 13 years means this is 13 years, okay, till 12. Then after that, and at the end of policy terms, okay, so 0. After that, 0. Am I right? Imran, I am right? It is correct. Cash flow is correct. And here you are getting 59 lakhs. 59 lakhs. That's it, right? Simple. That's it. 59 lakhs. That's it. Okay. So now you know what you'll have to do. Tell me what you'll have to do to find out the return. What you'll have to do. Tell me what you'll have to do now. Simply, yeah, you'll have to do IRR. That's it. You can do XIRR also, but for that you'll have to give the dates. Okay. Now, so how much you are getting? You are getting 4.93%. Okay, got it, Imran. So now, Anna, you decide. It's up to you whether you want to go ahead or not. Got it? Okay, so now you see what to do. So Imran, I have got Saurabh Nigam in Bank of India offering that we invest 2 lakhs for 7 years, and after 12 years, I will get 2 lakhs per year for 25 years, then 24 lakhs at the time of maturity. So this is also similar kind of question. Okay, just a moment. Mr. Saurabh Nigam, are you there with me? Saurabh Nigam, if you are there, then I'll calculate. Otherwise, I'll go ahead because we have done similar questions already. Answer. Saurabh Nigam, are you there with me? Type yes if you are there with me. Saurabh Nigam. Okay, you are there. Okay, fine. Okay, since you are there, because now we have another 1, 2, 3, 4 questions, right? So, so I'll be doing that. Okay. Since there is not many questions, tomorrow do not miss. Tomorrow is going to be an awesome session. So this is an eye opener, and tomorrow it will be your total brain opener. Okay. Okay, Bank of India offering that we invest 2 lakhs for 7 years. Okay, I am using here only. Okay, minus 2 lakhs. 2 lakhs. Okay, after 12 years, 2 lakhs for 25 years. Then 24 lakhs at the time of 24 years. So just a moment. Okay, so let me get it right. So this is total is get 2 lakhs per year for 25 years. For 25 years, right? From 25 years. So this is still 25 years. Am I right? Mr. Saurabh, am I right? 25 years. Radhakanta, can you put this question in this form? Radhakanta, please put this question in the form so that I do not miss it. Otherwise, I will miss it. So now, if you invest 2 lakhs for 7 years, okay, minus 2 lakhs, minus 2 lakhs for 7 years. 7 years means up to 6. Okay, minus 2 lakhs for 7 years. Then after 12 years, there is a gap period. We have already done these calculations. The gap period, you'll have to give 0. After 12 years, you will get 2 lakhs per year. 2 lakhs. 2 lakhs per year for 25 years. For 25 years means another 25 years or till here. Now you have to ascertain it is 25 years or 25 plus 12. 37. 25 years, this is okay. This is okay. This is okay. Saurabh, this is okay, right? Yes. Okay. Okay, fine. So if it is like that, then you are again getting 24 lakhs. So 2 lakhs, here you are getting 2 lakhs is equal to 2 lakhs plus 24 lakhs. Plus 24 lakhs. Right? Correct? Correct? Is it correct? Saurabh? Rajesh Kumar, please put your questions in this form, such that I do not miss them. Otherwise, what happen? Like I will miss your question, because questions will be going up, right? Our chat will be going up. This is where put your question, okay? Yeah, for no 25 years. Okay, so yeah, got it? Yeah. So this is 27. Okay, that's correct, right? So now we'll have to do ROI. 25 years, 24 lakhs plus 2 lakhs, right? ये 2 lakh भी मिलेगा ना? This 2 lakhs you will get, right? 2 lakhs plus 24 lakhs or only 24 lakhs? So this is right? This is correct. This is correct. 24 lakhs. Okay, this is correct, right? This is correct. Yes. This I am putting 24 lakhs. Okay, 2 lakhs, then at 24 lakhs at the end. Right. So now we'll have to give IRR is equal to IRR. So you are getting 7.43% per annum. Okay, this is the return you are getting. Not bad. If it is guaranteed return, then it's not bad. If it is guaranteed, okay. If it is not guaranteed, then yeah, then you'll have to take a decision. Understood? 7.43%. That's what you are getting. Okay, Aninda Chatterjee, for tax savings, should I choose debt funds or equity funds? You see, like you should not take a decision based on tax savings. Okay, tax is a very small percentage if you have proper knowledge, right? And to understand this, you will have to join my next level course. Then you will understand that tax is actually very minor thing. Okay, but we put, since people do not have understanding, in the name of tax saving, they invest in such kind of inferior products, right? And they waste their money. That is the fact, right? So those, once you have knowledge, then you will understand tax saving is a pretty minor thing, got it? So you need to have proper knowledge. Okay, so different your equity and they have different tax structure. Equity is, if you are investing more than 1 year, then you will have to pay 10% tax. If you have invested more than 1 year, then you'll have to pay 10% tax on your gain, profit. That's the long-term capital gain. In case of debt, if you invest beyond 3 years, minimum investment is 3 years. Okay, if you invest beyond 3 years, then after that you will get indexation benefit. That is huge, plus 20% tax. So it looks like 20%, but the thing is that the indexation benefit really reduce the gain. Okay, so you will get. So now it depends on your purpose. That is the most important thing. Your purpose. What is your purpose? Right? Based on the purpose, you'll have to take a, now today mango may not be good. Right? Okay, it might be a mango, it may not be a mango season, right? But might be this is the mangoes are not ripe, probably. Okay, probably. I don't know much, right? So probably it is not ripe, they are green. But if I want to make pickle, I don't need yellow mangoes, I need green mangoes. Got it? So this is how it is. Exactly, this is how it is. Okay, so you have to, it depends on your purpose. Based on your purpose, you can plan, you should plan. Okay, there is two things. One is your purpose. Second thing is that what is the risk that you are ready to take for that purpose. Okay, if you want to buy a luxury car, Mercedes, probably you want to take risk, because even if you cannot buy Mercedes, that's okay, you will buy some Maruti or something. But if it is kids education, probably you cannot take risk. Okay, so you cannot invest in just one mutual fund for all the purposes. Understood? So this is how the professional investors, those who are having knowledgeable investors, manage their investment. Understood? How to get pension of 5,000 per month if my age is 45 years. You see, Lokesh, are you there with me? Lokesh, are you there with me? Lokesh, are you there with me? Lokesh, Mr. Lokesh, you are there. Are you there with me? Okay. So you say how to get a pension of rupees 50,000 per month if my age is 45 years. Now you see how to get a pension of 50,000 per month. Now this calculation, this is a tough calculation. Okay, and today if I show you, it will be very plain vanilla calculation. Tomorrow you are going to see this calculation. Okay, tomorrow I am going to exactly, and that calculation is professionally calculated calculation, which is complex, but this will give you exact idea how much money you will be needing in your bank account to retire. Got it? And I'm also going to give you an idea tomorrow how much you should invest to achieve that amount. Okay, there are two parts. One is that how much money you need to survive your retirement, and second part is how much you should invest to attain that. Okay, both the things I'll show you tomorrow. Do not miss it. Okay, tomorrow I'll show you. You will get that. There is a table. I'll show you the table. Okay, I'll explain it. Don't worry. Now, this is investment of 1 lakh rupees per year for 10 years and return 2 lakhs rupees from 11th year till 10 years. I calculated ROI rate. I used, okay, just a moment. So this is just a moment. Okay, Mr. Arunava Paul. Arunava Paul, are you there? I use IRR formula and got 5.31%. Okay, if about I had invested earlier before joining your class only because I am a salaried person, and if keep in FD, I will be charged tax also. So since the rate is almost equivalent, okay. Okay, so he is asking rate is almost equivalent. Okay, so now, yeah, this is fine. Yeah, this is fine. Arunava, you see Arunava Paul. Okay, let me tell you whatever you have said. Like, you know, now Arunava is she has invested somewhere that is giving 5.31% return. Now Arunava's question is, since FD also gives similar kind of return, but it is taxable, but in other way, this particular investment is not taxable, right? It is tax exempted. So now he is asking whether this is proper or not. You see, this is proper. Provided if you're sure, like, you know, this is how it is. Okay, unless you think then you can earn more return, better return. Okay, so then it is okay. Okay, you have taken a prudent decision, right? But if you think that I can earn more, I can earn much more return, then of course, then it is not good. Got it? Very simple. You have already answered the question, and I'm so happy that now at least you have done a, like, you know, you could today you could make that decision properly. That is the most important thing. Then you have, like, you know, more knowledge. Then you will be able to have, like, you know, decision that is befitting that kind of knowledge. Okay, that's good. So you are very firm. You know it, what it is, how it is exactly. Got it? Beautiful. So how to check my mutual funds versus ULIP? Which one is good? You see, mutual fund is different, ULIP is different. ULIP is insurance. Mutual fund is investment purpose. Got it? They are completely two different things. Don't mix up. ULIP is not for investment. ULIP is primarily for insurance purposes. It gives piddly return, piddly insurance. Okay, very small return, very small insurance. Don't do that. Tomorrow we'll talk about it. Mutual fund is investment. For mutual funds, you need to have knowledge. There are several kinds of mutual funds. Do you have any knowledge? How many kinds of mutual funds are there? How many kinds of mutual funds are there? Right, wait. So Rajesh Kumar, okay, we'll discuss that. Rajesh Kumar, can you just put your question in the form? There are, okay, I have always said three. What are these three? This is a primary, these three. You know what are these three kind of mutual funds? Primarily, equity, debt, and money market. Okay, equity, debt, and money market. Then after that, there are a lot of mix and match. There is open-ended and closed-ended. That's the structure wise. Then there are equity, debt, and money market, majorly. Others also gold, etc., etc. I am not talking about it. Okay, and then there are mix and match, and they are given beautiful names to attract people. Okay, Now these beautiful names, they are given to attract people, and you need to have proper understanding of when to buy equity. And in case of equity, how many are there? In case of equity, there are index fund, large cap, mid cap, small cap. Right? In case of debt fund, how many are there? In case of debt fund, there are long duration, mid duration, short duration, low duration. There are money market fund and liquid fund. That also comes under money market fund only. Now, all of them are good, but all of them are not good for all the purposes and at all time. Sometimes mango is good, sometimes orange is good. You have to keep on shifting. Right? Okay. If you really want to get superior return, if you really want to have proper taste, then you must buy mango when it is proper. Then only you will get proper taste. When it's the orange season, you must buy orange. You will get proper taste. Understood? So you need to have that understanding. Got it? Please go through my level 4. Okay, so now Rajesh Dhingra, 21,000 for 10 years, and after 10 years, it's coming out to be 4.67%. Is it correct? Should I come out after lock-in of 2 years? Yes. If you have Rajesh Dhingra, are you with me? And I'm very happy that you have already given me the answer. Okay? Rajesh Dhingra. Rajesh Dhingra, you are okay. Rajesh Kumar, same? Okay, fine. Okay. So now you have already given answer. Please get out of it. Right? Please get out of it. As soon as it is over, there is a lock-in period. That means it is a closed-ended fund. I said just now, open-ended and closed-ended. This is a closed-ended fund. Get out of it. Okay? Have proper knowledge such that you can really choose the right mutual fund. Okay? Beautiful. Okay, sir, input on NFT and crypto. I don't have any idea about NFT and crypto. I do not understand them, and I do not invest in anything that I do not understand. Very simple. That is, Sumil Kumar is asking, I only invest in those places where I have proper knowledge. And I also tell my students, only invest in those places where you have proper knowledge. Okay. So now once you have knowledge, then you can invest. I'll tell you, I became bankrupt because I invested something I didn't have any knowledge about. Tomorrow I'll talk about that. Okay. I completely on the street, literally. Literally means, yeah, I was in home, but still. Okay. Tomorrow I'll talk about what happened to me. How good is small cases? It's not good at all, small cases. Right? You see, how good is orange? Tell me. How good is orange? How good is orange? Can you tell me how good is orange? Can you tell me, Omes? Not possible, right? You know, this is something, yeah, it depends on you. It depends on you. Got it? So it depends on you. So same way, orange is like, all the time you cannot have orange, right? Similar way. It depends on you. So for that, you need to have knowledge. Okay, you know what I did when I was asked to do some shopping long time back. My wife told me, okay, get some fruits. What do you think? What fruits did I buy? What fruits did I buy? What do you think? What fruits did I buy? I bought everything. Everything I bought. Okay? Not according to season, because I didn't have any knowledge. I bought little bit of everything and I took all the fruits. And a mango seller will never tell you, hey sir, please do not buy mango now. It is not the right season. Please buy orange. He will not tell you. Okay? He will always he is there to sell it. He will not tell you that. It is your responsibility to understand whether this is the right time to buy mango or it is the right time to buy orange. Now, since I didn't have knowledge, I bought everything and I came home happily. I give it to my wife. And see, my wife started shouting at me. This is not the right fruit to buy now. This is not the right fruit to buy now. This is too old. You do not know. You have no idea. I have no idea. That's why I bought everything little bit. That's what exactly happens in investment world also. Yes or no? Yes or no? That's what exactly happens in investment world. Yes or no? Everybody? Yeah. So you must have knowledge. That's right. If you do not have knowledge, then either you'll have to buy everything little bit. So you'll get some average knowledge, average return over a period of time, depending on when you enter. When you enter the market, or when you're done, when is your major chunk of investment. Okay? Depending on that. So it ultimately depends on luck. Got it? If you have proper knowledge, then you can come up. You know exactly when to buy which food. With no such of misspelling happening. Yeah. Which misspelling? I did some misspelling. Did I say some misspelling or something? Session is really happy. Okay, thank you so much. Thank you so much. Mis-selling. Okay, okay. Yeah, mis-selling happens. You see, like I got cheated. Despite being a finance guy, I got cheated in my Mediclaim policy. Now what to do? So now should I go to IRDA and file a case? Right? So I don't have time. I have to run my business. Got it? So this is what happens, and they also know. Okay, people are busy. People are busy. People do not have much time. So you can, and that's why I know that. But I was not going through the entire documents properly. That's my mistake. And I made a payment, and I didn't do that. And then later, only after 1 year, I discovered that I was cheated completely. Okay, this happens, and particularly not in this thing, because insurance, there are a lot of small things, right? So it was a coping policy. I was sold a policy, and I was not even knowing. It was a coping. Coping means I'll have to pay 20% every time. Okay, later only I came to know. Okay. I could have got such knowledge. Yeah, Mangala. Yeah, that is true. But at the same time, at least thank God you are here today, right? So that is the main thing. At least from now onwards, make sure it always happens, right? From now onwards, make sure you are not going to commit mistakes. Your hard-earned money doesn't go to bad places. Okay, from here onwards. Okay. Okay, thank you so much, guys. Thank you so much. Thank you so much. Tomorrow, please do not miss. It's going to be another awesome session. That's my promise. Okay. Tomorrow, I'm going to show you how to go to the next level, right? Financial freedom, how to achieve seemingly impossible financial goals, right? Also, I'll be talking about my next level course. In my next level course, it's a lifetime association. Every Thursday, we meet and we discuss about our investments. That's the next level course. We'll talk about it tomorrow morning. Please come. Do not miss it. Yeah, thank you so much. Thank you so much, okay, for your nice words. Thank you so much. Such kind of words really inspire me, right? Okay, sometimes people also tell very badly. Okay, this happens, part of life, right? But when you guys write good words, then I really feel happy. Got it? So I can go ahead. Sometimes I feel okay, chalo yaar. Okay, but yeah, but when you give such kind of words, I feel okay, let me go ahead. Okay, I'll continue going ahead, taking this inspiration. Thank you so much. Thank you so much. Okay, tomorrow we'll meet. Yeah, thank you. Yeah, Ravi Krishnamurthy, nothing. It's because I worked. Main thing is that, okay, you see, I worked in the equity market basically. Okay, so I did everything in the equity market, whatever you can think of anything. I designed IPO at what price IPO should be out. That I did. I did restructuring of the companies and selling the bulk shares. How to take shares out from the market, right? This is how to sell shares in the market, right? So these are some things are not very good, not very ethical. Okay, so everything happens. I have seen everything, and I used to advise the fund managers. Okay, since I worked, I have that knowledge. Very simple. I worked there almost entire my main career. I was involved in these things only. That's why I have that knowledge. Okay, so you work in some field, you have that knowledge, right? I work in this field, I have that knowledge, right? And yeah, you see, you cannot agents, you cannot blame them all the time, because you see, agents they are given limited focused knowledge, right? So they are given presentation. This is the product. This is what you'll have to say to sell the product, and they are asked to go, because I am from that industry. Got it? That's what they do. So now whatever they have learned, so they just say that, okay, and people buy. Okay. So now, so that poor fellow, yes. So they have not that much of knowledge. So whatever they get, so they just come and sell. That's it. That's what happens. Okay. So that's why knowledge is necessary. Knowledgeable we can. Yeah, thank you so much. Thank you so much. Do you give consults privately now? I do consult privately, but let me tell you. So the privately consultation is like, I have a separate fees for private consultation. You can discuss with Poonam. Poonam means our group admin. So she's Poonam. So you can discuss with her. And second thing is that, and it's like, my courses are very powerful. Let me tell you. Lot of people, rich people, they join my course. And after joining the course, normally they say, sir, I need your consultancy, private consultancy. Okay, so I always tell them, so you plus finish that course. After finishing the course, still you feel that you need my consultancy, I'll do the consultancy at the half the price. Okay, and I'm so glad till today, nobody has come for my private consultancy after doing my course. Got it? So my course is that powerful, next level courses. Okay, so nobody has to come. So, and this is much more cheaper than a consultancy. Consultancy is expensive. Okay, course is much more cheaper. And in the course also, I guide people, those who joins my next level course. This is for life. It's a lifelong consultancy. But in case of here, consultancy will be only for 1 year. Okay, 1 year means 3 review. Make your plan, review your plan in between, and at the end of the 1 year, I'll review the plan. So this is 2 review, creating plan, and 2 reviews. Okay, that much only. Okay, but this next level course is for lifelong. And it is not like, that you say like, I charge 25,000 rupees for creating your plan, and I'll give you 1 review after 6 months and 1 review at the end of the month. Okay, my next level course is not that expensive. It is much more cheaper. Okay? So this is how, that's why there's always better. And like, that we have a very beautiful group also. We'll talk about it tomorrow. So in that group also, you can get a lot of knowledge because they are all expert now. Got it? Sunil Kumar, how many levels means? This is 1, right? And after that, there is 1, and there will be 1 more later. But this is more than enough. You see, there is no. Now, if you ask me, okay, till what? Like, I have done my MBA, I have done my CFA. Right after doing the MBA, I have done my CFA. Also, I wanted to do some other courses also. So many courses I do. Okay, so there is no end to it. You cannot say like, after how many, after doing how much, my knowledge will be complete. Your knowledge will never be complete. Okay, so I have one friend, like, he has done so much. He's a very well-known, renowned person. So he is works in a very renowned organization, renowned institution. He has done his doctorate. Okay, then after that he has done his postdoctorate. I asked him like, why you are keep learning? And then his answer was like, every time I learn and I discover that I have so many things to learn. Okay, so this is how it is. So now today you have realized, okay, this is how much knowledge you will have. Once you have that knowledge, then you will realize, okay, there are so many others. Okay, so it is like that, but it should be goal-based. And for a lot of you guys, okay, this is the goal. Okay, I need this much of knowledge only. Now you think, okay, I need the knowledge how to choose the right mutual fund. Then there is a second level knowledge. Okay, so after that, if I think, okay, no, now I have got achieved financial freedom. Now I really want to have fun. I have fun means I want to know how to take risky investments, how to invest in futures, how to invest in options, how to invest in directly in shares. What is the knowledge, right? So there is no end to it. It's an endless thing. Got it? It's an endless thing. But you'll have to have target based. For this target, okay, this is knowledge, this much knowledge I need. For this much knowledge I need. Okay? This is like this. Learning never ends. And if you realize it, then it's better that you keep on learning. Okay? This is very, very important. Okay, thank you so much, guys. Thank you so much. Trading also, you're giving training. Shares and trading, no. Abu Sufyan, no. Shares and trading, we do not give. We give training on equity market because we invest in mutual funds. We are going to have a separate course which is on equity investment, but that is a separate course, right? This course is separate. This course is like here we are investing just to achieve financial freedom such that our money doesn't get wasted and we can invest in proper place. Like, you are working, right? I'm a professional. This is my profession, being investments. You are not. You have some other jobs, okay? But if you think, okay, this job is there, apart from that, I want to get some good knowledge about share market. So that will be for that. But for somebody who is working somewhere else, you are an IT person, or you are a might be chartered accountant, you are a doctor, or you are some in marketing, but you want to make sure that your hard-earned money should not go in bad places for this course and next level course. That's it. Okay, and I always suggest my students, do not do any other course. Okay, until and unless you have a lot of surplus money. Okay, that's it. Okay, it should be, you should be very focused. So this is my goal. This I want for this knowledge. Okay, you see, like I did one marketing course, that time, this I have a mentor. I have got a lot of mentors. Okay, so one mentor I went to just to launch this product and market this product that you are here today. Okay, so now I am doing another course, another mentor, that is for the next level. That is for the next level. So now I want to go to international market and bigger market. Now with this, so this is my limitation. I cannot go. I have tried quite a lot. So I have understood this is my limitation. This many persons only, students only come to me. Now to go to next level, I need a different mentor, or the same mentor, different course. But unfortunately, my mentor doesn't have any other course, high level course to expand it. So I got another mentor. Now I am doing it. So after completion of that, then I will go abroad. Abroad means from here only, India only, right? But I will market outside India. Okay, so this is how it is. After that, I will see. Okay, so it is like that. That's a very focused, purpose oriented. You have this purpose, have knowledge. For that purpose, you have knowledge. It's like that. Got it? Okay. Good night, guys. Good night. Thank you so much. Thank you so much. Thank you so much, everybody. Thank you so much. Good night. Tomorrow we'll meet at 10:30. It is already 10:30. Tomorrow again we'll meet at 10:30. Okay? 10:30. Good night. Thank you. Thank you so much. Thank you so much. Bye-bye.